Good evening and welcome, Marshall Reddick investors. This is your real estate advisor, Dave Kling, and I'm very excited to see so many people tuned in for the webinar tonight. For those of you who are new to Marshall Reddick Real Estate, we are a real estate investment firm here in Newport Beach, California, and we were founded in 1979 by Dr. Marshall Reddick, and he created this group of this network to help real estate investors like yourselves grow their wealth through the buy and hold investment strategy. Our main goal here at Marshall Reddick is to help you invest your hard-earned money and to help create passive income and grow your wealth. As real estate investors, all of you are looking to invest for one thing or another, whether it's your child's education or you're looking to retire down the road or just to create passive income so that you can retire. As a real estate advisor here at Marshall Reddick Real Estate, I work very closely with you guys, the investors, to help understand what your goals are, what your criteria is, and find the right investment properties for you. Just a little background on myself for those of you who don't know me. I'm a licensed real estate agent here in California. I have a background in real estate finance from the Arizona State University. I was in the W.P. Carey School of Business there. And I have helped many of our investors here with finding the right properties and walking them through the investment process. But for tonight, we have an excellent presentation for you guys, and I'm very excited to bring on the call for the very popular St. Louis, Missouri market. And we have our awesome rep, Bob Canaday, with Top Real Estate Professionals on the call tonight. Bob is the owner and operator of Top Real Estate Professionals. He graduated from the University of Missouri in 1979 with a bachelor's degree in business administration. Bob also owns Top Property Management, where they are currently managing about 550 homes. Bob's had an excellent presentation for us tonight. He's going to go into detail of what makes St. Louis a top market for real estate investors like yourselves, and some of the cash flowing and turnkey, rent ready, and already rented properties that are available for all of you guys tonight. So without any further ado, I'm very, very excited to bring on the call Mr. Bob Canaday.
Thanks for the introduction, Dave. As Dave said, my name is Bob Canaday. A little bit more about my background. I do own 3 companies here, real estate related, the Top Real Estate Professionals and Top Property Management, and also our contracting company, which is Rainbow Contract.
The broadcast is now starting. All attendees are in listen-only mode.
I started in, my initial background is in contracting. I started that business in 1982. And we were operating the contracting business in all 50 states, and we had as many as 125 employees on staff at that time. In 1995, I reduced the size of our contracting company and started doing business in St. Louis only, and at the same time started into retail real estate. I started by flipping homes, purchasing them, renovating them, and flipping them. Usually did about 25 to 40 flips a year. And then I also became one of the highest volume realtors in our county. Usually sold over 100 plus retail homes along with the contracting and the flipping. Kind of peaked out in that end of the business in 2010 with over 1,000 homes sold that year. Right now we're really concentrating on the investment homes and the property management. We're currently managing 550 homes. And we want to start by telling you a little bit about the St. Louis investment market. Overall, St. Louis is a low-risk investment area that has steady growth and good rates of return. First slide we have here is on shows the Gateway Arch along with the old courthouse, the center of downtown St. Louis. Very active area that brings a lot of tourists to this area of St. Louis. St. Louis is a good area for real estate for a number of different reasons. We highlighted here some points on St. Louis. St. Louis was ranked #1 happiest city for job-seeking college graduates by Forbes. St. Louis has always had a very strong job market, which translates into a good real estate market. We've always had our graduates, a lot of the colleges have close to 100% placement in their feature fields. St. Louis is also ranked as the #1 rental market in affordability for recent graduates. The rental market and the purchasing and rental market in St. Louis is very affordable as compared to the other areas of the country. St. Louis also has 9 Fortune 500 companies headquartered here in St. Louis, which ranks it #5 of all cities in the United States. Population is 2.8 million in the metro area. That includes the city of St. Louis and the surrounding counties, the biggest county being St. Louis County. Cost of living is 5.6% below the national average. So St. Louis is an economical place to live. The Fortune 500 companies in St. Louis, the biggest one being Express Scripts. You've also got Emerson Electric, Monsanto, Centrene, Peabody Energy, Ameren, Graybar Electric, Reinsurance Group of America, and Edward Jones. So we got 9 very stable companies producing jobs. But the key to St. Louis is not just those 9 companies. It's the fact that we have a very diverse job market where most of our jobs are not coming just from these 9 companies. They're coming from numerous industries in St. Louis, and it's very diverse and very spread out amongst those industries. Also have many universities in St. Louis. The biggest one and most prominent one being Washington University. We also have St. Louis University, Lindenwood College, and University of Missouri St. Louis, all located in St. Louis. A lot of people talk about the spirit of St. Louis as referring to the entrepreneurship and all the small businesses in St. Louis that create jobs. Also, it's one of the lowest housing costs in the country. We've got some more slides on that later that show some statistics on the low housing costs for both buying and renting in the St. Louis market. Also have a very modest corporate income tax rate. The corporate income tax state rate in Missouri is only 6.25%, and you'll find that that's lower than the majority of the country. St. Louis was also ranked 9th in the least costly metro area to do business by the accounting firm of KPMG. As far as property taxes in St. Louis, property taxes are also some of the lowest in the country. We range between 1% and 2% of the value of the property for our property taxes. And that percentage is also helped by the fact that our real estate is lower than most areas of the country. This slide shows an example of where our jobs are coming from, and as you can tell, they're very well spread out amongst a number of different categories. Or not, if one category starts having a problem of some kind, it's hardly noticeable in the St. Louis job market. The St. Louis job market is very steady. And this is a pie chart on those same things. As you can see, there's no one area that controls the St. Louis job market. This chart shows the ratio of home prices versus income. As you can see, the top line, the green line, is the national average, and the red and blue lines are the St. Louis average, where St. Louis is just above a factor of 1 for home prices as compared to average income, where the rest of the nation is much higher than that. This graph shows the trend in St. Louis on median sales price and the way appreciation has went in St. Louis over the last 25 years. You can see on the left-hand side the average appreciation over all 25 years is 2.6%. And other than the downturn in 2007, 2008, 2009, had a very steady growth. Also, as you'll also notice, in our downturn years, 2007, 8, and 9 is much less than many areas of the country. Many areas of the country got hit a lot harder than St. Louis. St. Louis took the downturn pretty well. Got a lot of statistics here showing the appreciation in St. Louis. The closed sale prices for the last year have went up 6.5%. And it's we're growing more this year. The appreciation is better this year and is on an upward swing over the last few years. So it's really gaining momentum. You're seeing on investment houses especially, every bank foreclosure, every as-is house that comes on the market, we're seeing multiple bidders, and that's true in most areas of St. Louis on the retail sales also. Most of the areas of St. Louis, houses are selling really quickly and they're getting multiple bids. We're also seeing a big push in demand on investment houses, where there's a lot of national companies. We're currently handling 4 ourselves, 4 national companies that are buying investment houses in St. Louis, buying them 50 and 100 at a time, and sometimes even more than that. And it's really increasing. The demand that they've brought to the area has really stabilized the prices and really pushing the prices up. So, and a lot of them are realizing, all of our investors are realizing that it's a good timing in St. Louis. We're on the upswing and not really in the steady hold mode that we've been in the last few years, but it's really gained traction in the last 12 months especially. This graph here shows how the days on market is another example of why the market prices are increasing. The days on market are getting less and less month by month, again, as the market is really grabbing hold in St. Louis area. And we're seeing the houses selling quicker, and we're also seeing the prices edge up month by month. This is a map of the St. Louis area. The Arch is located in the right in the downtown area, where I've got my arrow. Another big area is Forest Park out in this area here. Forest Park and the downtown Arch area. Downtown area also has the baseball stadium and the football stadium. So those are the 2 centers of activity in St. Louis. Most of our investment homes and most of the people are living outside of the city limits of St. Louis. Most of the investment homes we have are right directly north of St. Louis. And the reason being, we found that is the best area. That's the sweet spot for investment. That's where almost all the rental investment is taking place. We're getting good rents there. Prices are stabilized and increasing, but they're not as high as some of the other areas in St. Louis are much higher in price and do not get enough rent to justify the higher price. It's a picture of Forest Park. Forest Park is a 1,300 acres, as I showed you on the last map, kind of in the center of St. Louis. Features a few things. We've got the St. Louis Zoo that brings a lot of people into town. It's a large, famous zoo that's totally free to get into, unlike most of the zoos around the country. Also got a large science center in Forest Park. We've got a large outdoor theater called the Muni. It was opened in 1917. It's actually the oldest outdoor theater in the United States. Also got a nice art museum located in Forest Park. It's a nice area. They have an annual balloon race there. A lot of festivals, and it's really the center of activity along with the Gateway Arch area. To show some pictures of some of the festivals that go on in St. Louis and the type of crowds that they bring. The area you're seeing here is between the Forest Park area and the downtown Arch area. It's another area showing showing festivals in St. Louis. A lot of the festivals are located either at Forest Park or downtown St. Louis or South St. Louis. St. Louis is the home of the St. Louis Cardinals. The St. Louis Cardinals, more than any other sports team in the Midwest, really bring a lot of business to the St. Louis area. The St. Louis Cardinal fans range about a 300-mile radius out of St. Louis. Very common for people to drive in from 200 and 300 miles away just for the game and then drive back home at night. A lot of them spend the night, but a lot of them just come in just for the game. So it brings a lot of hotel and a lot of restaurant activity to the downtown area, and therefore a lot of jobs. We also have in St. Louis the St. Louis Rams football team, which is also located right downtown, and the St. Louis Blues hockey team, which is very close to downtown. Single-family residences, we do almost all of our investment activity in the single-family market. I'm really a believer in the single-family market in St. Louis as opposed to the multifamily market. I've seen a lot better rate of returns and a lot better success in the single-family business. The area that we really push our investment in, the North St. Louis County area, doesn't have nearly as many multifamilies. Most of the multifamilies are located in downtown St. Louis and in South St. Louis. And we tend to concentrate our activity all within about a 10-mile radius of what's called North St. Louis County. And I think Dave is going to go over some of the numbers on some of the featured properties that we have.
Absolutely. Thanks, Bob. Just to give you guys a breakdown on our spreadsheet here, and all of you can find this information right on our website at marshallreddick.com. And this is really good info to know, but on our breakdown we have a few things for you guys to take a look at here. We have the annual appreciation for the market, which we can see here is at for this particular property is at 2.1%. Now, because of the annual appreciation rate, we factor that in with our C-class properties. We drop that down 0.5% for annual appreciation. If it was at B-class, it would be at the actual annual appreciation. And for A-class properties, we actually bump it up 0.5% for the annual appreciation. We have a lot of info here. You can see what the square lot size is, what the year built is, what the square footage of the house is, the price per square foot, 3-bed, knowing that it's 3-bath as well, and then a lot of the good information. So purchase price. For down payment, we factor in about 25%. Reason we do that at 25%, you can do 20% down as an investor for an investment property, but after your 4th mortgage, they do require you to increase that down payment for single-family homes to 25%, and a lot of our investors do have more than 4 mortgages, so we factor it in there. But once again, on our website, you can play with the numbers and decrease that down payment to 20% if you'd like. We also factor in the closing costs for you. We show you what the rental income is on the property, your total investment capital needed in order to purchase the property. We show you the mortgage payment, what your taxes and insurance would be, and you can look at that from a monthly or annual basis on our website. We show you what the management fee is in that particular area based off of the management rate that we've negotiated with our property managers out there in the market. So as a Marshall Reddick investor, you guys are getting that preferred 8% for property management. We factor in any other cost, HOA fees, utility fees, landscaping fees, which gives us our total monthly expenses. And then we have our monthly income, what the property is actually going to produce us. Then as an investment group, we like to under-promise for you guys and overperform, so we want to make sure that we're really factoring in everything. We look at estimated maintenance on each property, and for our C-class properties, we factor those in at 13% for maintenance, 13% for vacancy. For our B-class properties, we'll factor that in at 10%, and for our A-class properties, we'll factor that in 8% for each. We also factor in the leasing fee based on each property, and for this one, it's going to be 50% of the first month's rent, and then we factor that in over an 18-month period, which gives us our monthly cash flow, and then we can see our 15-year projected profit, and then the 15-year annual return on investment. And once again, on our website, you can play with those numbers, see what your profit would be in 5 years, 10 years, 20 years, whatever you'd like. We can really taper it, and you can use the numbers however it works for you and what your goals are. So I'll throw it back over to Bob, and Bob, you can give us a little bit more detail about this particular property.
Yeah, this is really a typical property that we have. As you can see, the rent on this property is $1,025. This one happens to be a Section 8 rental. We have both kinds of rentals in St. Louis. We have Section 8 and market rent. We like Section 8 because in most cases, Section 8 pays the entire rental amount. In some cases, the tenant pays a small portion of that, but it just gives us good steady collections. We get one huge Section 8 check at the beginning of every month and then divvy it out to all the owners. This is, as you can see, our properties, tend to look somewhat alike. I mean, most of them are ranch style. Most of them have garages. Some have carports. This one's got a little less rent than the last one, $890, but still good rent for a 74.9 house. Yeah, what we do on rehabbing these houses, initially, all these houses that I have featured today, we initially help the investor buy these houses, and we totally rehabbed them from the beginning. And then every time a tenant leaves, we do a turnover on the property and put it back in the same shape it was in after our rehab process. Also on the Section 8 properties, we have an annual inspection in St. Louis where Section 8 comes at about the 9-month point of the lease, does an annual inspection, and just helps us monitor the property and keep them in the proper rental condition. They give us a little checklist of things to do that we have to get finished within usually a 30-day period, so they'll renew the lease at the end of the 12-month period. Most all the leases we do are for 12 months. Section 8 leases are also 12 months. This slide shows some of our interior finishes. The bottom photo you're seeing is our typical paint job, typical colors that we're using in almost all of our houses. We tend to, in most all of our houses, we've gotten rid of the carpet. We like to do one of two things on the floor, either finish the hardwood or put down a good quality laminate wood. And probably our most prevailing is the laminate wood. That's held up real well for us, you know, tenant after tenant, totally different than what we experience with carpet. Top right-hand corner, you can see that's our typical kitchens. This one's a little bit smaller than most of our kitchens, but typical cabinet layout. When we're renovating them initially, we're putting in new cabinets, new countertops, new sinks and faucets, and typically new appliances. Another one of our properties, as you can tell, is most of them are in this size range. This one's 1,080 square feet. I would say that is more of an average. We got a few that are down in the 900s, but that's not nearly as common. A lot of times we're up in the 1,100 to 1,500 square footage. We try to get houses with at least 3 bedrooms. All the houses we have featured here are at least 3 bedrooms, and most all of them will be at least 1.5 baths. Most all of our houses also have basements. There's one thing you might want to notice here on, it varies per house. So talk a little bit about the utility fee we have, $40. That'll be on some houses it'll be $40, and some houses it'll be $0. And what that is referring to is the sewer bill. In St. Louis, we have the tenants pay all the utilities except the sewer bill, and that varies. The reason that varies, in the St. Louis market, if the tenant does not pay a utility bill and then vacates the house and leases up or whatever, you're not responsible for any of the utility bills that the tenant would leave behind, except the sewer bill. The sewer bill averages $39 to $40 a month, and if the tenant doesn't pay it, the owner has to pay it in St. Louis. So what we do, we pay extra attention to the sewer bill itself. In some cases, what we're doing is we're taking a property maybe that rents for $850 a month, and we're negotiating that in the lease up front with the tenant, where we're saying the rent is $850 plus $40 for the sewer bill. So now your new rent is $890, and the owner will pay the sewer bill for you. In other cases, we have it in the lease where the rent is $850, and the tenant has to pay the sewer bill separate, but we bill them the sewer bill along with billing them for the rent. We bill them for the $40 sewer bill. So we're paying extra close attention to that. If they leave a sewer bill behind for some reason, we're taking out of their security deposit so the owner doesn't get stuck with it. This is one of our bigger houses that we have featured today. Its price on that, as you can see, is $1,039, brings in $1,200 a month rent. This house 2 years ago was fire damaged, so we completely went over the entire house. The owner spent about $60,000 renovating it. He'd already renovated it like 5 or 6 years ago when he bought it. But with the fire damage and smoke damage, we went through and replaced everything again. As I said, he spent about $60,000 on it. So it's like a new house, honestly. This shows some of the some interior photos of that same house. This is an occupied house with a tenant in place. As you can see in the top left-hand corner, that's what our laminate wood typically looks like. That laminate wood is about, I guess we renovated this one a little over a year ago, so it's a little over a year old. It still looks just like the day we put it down. As I said earlier, we're currently managing 550 homes. One of the keys to our success in our market has been our contracting experience. Our separate company, Rainbow Contracting, performs the maintenance, turnovers, and rehabs on these properties. And that really gives us two advantages. We're able to respond very quickly when we need to. We don't have to rely upon subcontractors. And we're very, very cost effective, because now Rainbow Contracting only does business in the St. Louis area, and 90% of its business is just taking care of these rental homes. It's not it doesn't have to be a standalone business as a profit center. So we have much lower pricing than any of our competitors in contracting in St. Louis. As Dave said earlier, we do have an 8% management fee, and for Marshall Reddick customers, we only charge a half month's rent for tenant placement. I'll turn it back over to you, Dave.
Awesome. I appreciate it, Bob. That was great, and a lot of good information there. We have a lot of questions coming in, and definitely want to get to as many of those as we possibly can. The first one here was actually for me, and they were asking how we determine the annual return on investment. And like I had mentioned, guys, if you jump on our website, you can see all of the financials. You can see all of the formulas we use. On the financial breakdowns on our website, there's a little function button. It's an FX next to each calculation, and it'll actually show you the formula in there. So for the return on investment, we're taking the total projected profit divided by your investment capital divided by years held. And so that kind of will show you through, and each calculation on there is provided for you on the website for you guys to review and see how we come up with these formulas. The next question, though, that coming in is for you over here. This one's from Giza. He had reached out and wanted to know which of the properties that you'd shown tonight are Section 8 and which ones are tenant occupied without Section 8.
I have to go back and look at those real quick. The one on Crossit is a market tenant. Outlook, I am unsure about. Linnell is a Section 8 tenant. Cadbury is Section 8. Mammoth is Section 8. So one unsure, and the rest of them are Section 8 except for Crossit.
Okay, very good. And then I have another question coming in from Kyle. Kyle asked, on average, how long does it take to get one of these properties rented once they become vacant?
What we're looking on that is a 60-day turnaround. During the first 30 days, we're doing two things. We're getting the property back rent ready and passing inspections, and also during that process, we're also marketing it to a tenant. So we like to get a tenant in place within 30 days, so that as soon as all the inspections are passed, he can move in no later than 60 days after it became vacant.
Gotcha, very good. And then Giza had one more question. As the property management, do you guys take care of the utility turn-offs and turn-ons when the unit is between tenants?
Yes, we do. We take care of all the utilities between tenants, and of course the mowing of the yard and any snow removal during the winter.
Awesome, awesome. And then we have another question coming in here from Rick. Rick wanted to know what's the screening process that your property management goes through with finding tenants?
Okay, on our market tenants, we're screening for income, for criminal history, landlord history, and their credit score. So we're looking at all 4 of those items: income, credit, criminal, and landlord. And then our Section 8 tenants, all that same screening is done by Section 8, except they're not caring about the credit and the income because they're the ones paying the rent. So they're looking at criminal and weeding out any bad tenants in that manner.
Okay, very good. And then Susan writes in, she wants to know, how many employees does your management company currently have?
Our management company has 11 full-time people and 2 part-time people. And we're set up a little differently than most management companies, where I have a property manager, a full-time property manager that's just in charge of tenant contact. There's nothing but talk to tenants all day long. I have another property manager in the office that does nothing but is the main contact for all the owners. So all the owners have one point of reference to come to, all the tenants have another point. And then we have 3 field property managers that come in the office for about an hour in the morning, get organized, and go out in the field all day and are seeing the properties and the tenants face to face. We have 3 full-time marketing people in the office, 1 full-time collection person. We have an overall supervisor and myself as the owner-operator, along with 2 part-time administrative assistants.
Awesome, awesome. And then we got a couple more here. Rachel wrote in, are the owners charged a quarterly inspection fee? And if not, how frequently do you inspect the properties, and what is the charge to the owner for inspecting the properties?
We do not charge for inspecting the properties. What we do is every maintenance call we get on the property, you're getting one of our field property managers go to the property and look at that maintenance item and also inspect the property at that time. And then on all of our Section 8 properties, we're getting that at the 9-month point. So we're getting a full-blown inspection at the 9-month point. But we're not charging for the inspection itself. That's included in the management fee.
Very good. And then one last question here. And Christine writes in, why is now a good time to invest in the St. Louis market?
Overall, it's because of the steadily increasing prices and the fact that we just have a high demand from the tenants. It doesn't take us that long to rent properties. What we're experiencing in St. Louis now is a lot of national buyers are coming to St. Louis and really pressuring the market and driving the prices up. We just had a large sale take place. It hasn't actually closed yet. It just got announced a few days ago. But a company called Cerebus came into the St. Louis area, and they bought 4,200. They closed a deal on 4,200 houses in the Midwest, 800 of them being in the St. Louis area. So they scooped up 800 houses all at once. We were actually involved in that deal. The current owner of the 800 houses hired us for about a 10-month period to stabilize his portfolio, to get it ready for this big sale, and then and now he's got a contract on all 800 houses, and I think it closes sometime next month. But that's just an example. I know 4 or 5 national contractors that are buying on a daily basis in St. Louis.
Awesome. Well, that'll wrap it up for us tonight, guys. Bob, I really appreciate you jumping on the call with us and letting us know a little bit more about the St. Louis market and sharing some of these awesome investment opportunities with everyone tonight. Guys, as you can see there on the screen, there's my contact info. You have my direct line and my email. Shoot me over an email. Give me a call. If there's anything on the webinar that was of interest for you guys tonight and want to lock it down or want to get some more information on it, feel free to reach out. If I know there's a lot more questions coming in, so we'll be sure to answer the rest of those for you guys later on. And glad to have everyone on there and sticking with us throughout the night. And once again, thanks again, Bob. It's been a pleasure and really appreciate the presentation.
Okay, thanks, Dave.
Alrighty. Bye, everyone.